Hi everyone, let's take a look at our chart today. So what happened? Actually, if you guys see the daily chart, what I think the most important thing to notice is that on the daily chart, if you look at the daily chart right here, so after this big huge bull bar, the market has been in a tight trading range for like maybe how many days? That is 7 days. It's in a tight trading range. So I think today, when before today, we can either think today could be a big bear day or a big bull day, because it has been there for quite a long time in the tight trading range. Normally, I mean, it's both bulls and bears are trying to break out, and if it's going to continue in the tight trading range, even put it this way, even the market is trying to continue in this tight trading range, today is probably or more likely going to be a bull day, right? Because if you look at this is the yesterday was a bear day, and in the trading range, bulls and bears tend to create couple bull bars and then couple bear bars alternatively. So I think we can reasonably guess today it has maybe a higher probability of going a bull day. And but again, we need to, it's just the bias, and we need to look at the actual bars. But that can be a good starting point when we start the day. Now, if we look at the 5 minutes chart, and today both did get a big bull day today, and there was the relative big, I think it's pretty good big gap up, right? It's pretty good gap up to here, but first three bars are bear bars. But one thing to notice is that if you can see all these three consecutive bear bars are having tails, that's a sign of a weakening selling pressure. And the second sign to notice is that you can see the bar size are decreasing, and bar 3 is the body is pretty small, and that's also another sign of selling pressure are decreasing. So when we see this, we have to think about that this could be just a bear trap on the open, and bulls will buy aggressively. And that's what happened from 4 to 9. We can see bulls are buying more and more aggressively from 4 all the way through 9. They are actually pretty much from 6 to 9. There are 4 good bull bars. Even there are tails, but 9 was a big bull bar closed on high and closed far above 1, which is good for bulls. And also you can see this bounce, called the bounce or called the reversal. It wasn't able to close the gap above yesterday close 81. That's one good thing for bulls. Another good thing is that we can see high of yesterday, this line seems to be a good support. If we look at this, right, seems to be a good support for bulls, and it didn't get far below high of yesterday, and bulls started buying. Even it's not that, even 4, 5, 6 are not that impressive. They are just like doji like bull bars, and then bear doji, and then an okay bull bar. But the thing, I think it starts to change a little bit from bar 7 being a big bull bar, and it was a tail, but it was able to close as a good bull bar with a good size bull body, and 8 was a good follow through. And 9 was probably some bears get out, take their loss. Those bears who probably sold below 1 and looking for a big bear day today, and they gave up, and there was a big bull bar 9, and then 12, 15 are they basically double bottom bull flag, you can call it, right? A high to buy. 15 is the high to buy. 11 or 12 is a high one buy. 15 is a high to buy. So high, I think 12 may not be that good. Reason being, well, I think you can still try it, but I think these 3 bear bars, they are, we said that they have tails and their body are shrinking, but they are still 3 bear bars. So bears is probably want to try again, try to create a double top around here and to fail the bulls breakout. And that's what happened 13 and 14. But 15 make the bears kind of gave up. So I think you can either buy, I think I actually bought the close of 9, right? I think that's reasonable. And you can either buy above 15, which is also reasonable. And if you bought 9, your stop is below 9. And we can see the bulls didn't, bears wasn't able to trigger the stop, both stop below 9, which is good for both. So usually if you're trading a breakout like this and you want to get in earlier, 2 ways, right? Either first you get in earlier, second you get in late. And if you want to try to get in earlier, you just buy the close. And I think 9 is good enough to buy the close or buy above. And then your stop will be below the breakout bar, which is bar 9. And this is what happened today. And you can see bears wasn't able to get the price, to bring the price down below the breakout bar, bar 9. And also to here, what we can see is this. We can see bears wasn't able to make, the stop order bears wasn't able to make profit, a scalping profit, right? If they sold below 10, they are not yet making a profit. And from bar 1, the same. If we draw a merit move, if bears sold below 1, were they able to make profit? No, they were not. So that's good for both. So when you see 15, I think all these good reasons are kind of good enough for traders to consider buy above 15. It's very kind of a good setup. And there's also we can see below 15, actually here, from the open, there is a body gap. There is no regular gap, but there is a body gap, which is also good for both. And then we can see both starts to start a small leg up and get here, and then it enters to some kind of a trading range, starting from 11 o'clock Eastern time, and all the way down to 1 p.m. And this is the noon time, and we can see the pullback, bear bar, good bear bar, and another good bear bar, but bear bar, bull bar, bear bar, bull bar. Every good bear bar there is a good bull bar, and then 3 bear bars, doji long tail, and then 4 good bull bars. They are good. They are good in terms of they are better than the prior, than the earlier bear bars. So they are good. They are still good. So when we talk about, a lot of times when we say good bars, it's more important we compare the bars to the left. If they are if you just look at these 4 bars, they are not that impressive, right? Just 4 regular bull bars, they're not that big. They have a lot of tails. But if you compare them with what's on the left, if you compare them with these bear bars, they are good, which is enough, because that's telling us the bulls are stronger than bears today, at least today. And we can also see it has been testing EMA, but never able to get down and never able to close below the EMA, which is also good for bulls. And the bulls, some bulls might bought above 20, and if they bought above 20, they probably get out below, but they can buy again above 22, and we can see the bulls who bought above 22, their stop is below 22, and their stop is safe. And so when you see this, and those signs are good for both. And when you are still not sure, you can wait for another bar. And 29 is a better bar than 28. And I think 28, 29 together is kind of telling us that, hey, we both are strong, and both are trying to protect their stop below 22. So buying above 29, I think it's also reasonable buy. And then 4 bull bars and bear bar, and then bull bars, bear bar is still in some kind of trading range. And then another 4 bull bars, very small, but still 4 bull bars and bear bars. And then they still couldn't get below EMA, and then a string of 8 bull bars get added to the chart. And this is the when you see this, well, when you see 44, I think 44 is another time to buy, because when you see this, when it's at 43, we don't know whether the trading range has ended, right? We know that in the strong bull trend, usually the market would get 2 hours of trading range in middle of the day. And this is really, if you look at this, the trading range, we can probably say the trading range stops at here. It's 1 p.m. and it starts at 11. It's exactly 2 hours, but you never know. It's a probability. It's based on probability. So I think we can try, but to be at the safer side, can probably wait for the breakout. And now when we see the breakout 44, I think it's a buy. You can buy above 44. You can buy the when it's going up. I think I bought when the 44 is going up. And because when we see 44, it's telling us market is in the bull trend. And when it's in the bull trend, you just buy. And for experienced traders, as soon as they are confident the day is in a bull trend, I think the best way to trade this is that you buy. You can use market order or limit order buy at the EMA, since in a strong trend, EMA is definitely the can be a very, very good support, and even sometime the price can go. Bears can create 3 or even 4 consecutive bear bars and close below EMA, but in the strong trend, that usually got bought aggressively by bulls, and then become a bear trap. So I think it's good. It's a good way to manage the trade, buying at the EMA using limit order and market order. But again, this is for experienced traders. For beginners, it's hard, because the challenge doing that way for beginners is that it's hard for them to accurately, or as accurate as enough to read the chart, to recognize whether the market is in trend or it's in the trading range. So they can buy, if the market is in a trading range and they buy at EMA and it quickly goes down, and then the beginner will start to panic and they don't know what to do, and they usually will start to scale in and they buy more, and then when they buy more, the market starts to accelerating down, and eventually when it's get to low enough, they cannot take their loss. They cannot take it. They decide to take the loss, and then the market reverse up, and it become a miserable day at end of the day for a beginner. So it's hard to do, but when you get more experience, I think it's reasonable to buy the EMA. And that's if you look at the chart today, if we just look back, see, if you keep buying EMA here, and you will make a lot of profit during the day. Okay, then we can see the market went through a trading range for 2 hours during the day, and then there is a bull breakout above the trading range, or you can also say there is a bull breakout above this wedge. There is a wedge, and then trading range, and then bull breakout above the wedge. And it's typical strong bull trend, like small pullback bull trend, and both keep breaking above the wedge top. So this is a 3, 4, 5. This is the 7 consecutive bull bars and bear bars. They all have tails and small body, and then 3 bull bars and bear bars, and then big bull bar. Now it's here at 10, and by the time at 4 around 2 p.m. Now, if you look at this, you know market is in bull trend, and can 56 be the start of the reversal? It's less likely. It's in a bull trend. 80% of the reversal fails. So so the point is that you can just buy around EMA 56 at 56 close, or maybe a little bit lower at EMA using limit order. And I think that's reasonable to do. But if you do that and you see 3 or 4 consecutive bear bars, you just have to take the loss. That's the trade-off. And then here you can see after 56, these 3 bull bars, that's what both are buying the close of a good bear bar. And then 61, a good bear bar, and a lot of bulls bought 62, big bull bar. And then 63, good bear bar. Look at what happened next. 64, good bull bar, close on high. So if you are a stop order trader, 64 by buying above 64 is a reasonable trade. Or if you are experienced trader, you can buy the close of 63 and 61 at EMA. At EMA, there are good chance for both to buy, betting the bull trend will continue, and it's more likely it will continue. This kind of day is for trend traders. Is like day that you make most of your money to offset in those trading range days, and when you try to bet a trend but failed, it's not a trend, and you get a loss, and less those loss, you make a profit. So let's see next. These are 4 bull bars, and then market 67. Kind of like the climax buying, and you can, if you are worried, you can probably get out half of your profit, and we can see to here it's really to 330 is really in a tight trading range, and 73 is a good bull bar, but these are more like a spike and channel. This is a spike, and then this is the bull channel. I think it looks like the market did get to a merit move today, which is pretty amazing. We can draw the merit move this way, probably. See if we draw the merit move this way using the height of this bull breakout, and yeah, it definitely gets there. And let's see where this is. And this is probably Anyway, roughly we can see the height of this wedge, and the bull breakout of the wedge, and merit move to here. I think let's see, there's a wedge here. There's a wedge here, wedge top here, we can say. right? And then, but we can see both breakout. Maybe we can draw the wedge. This is the better wedge. First push, second push, third push, and both tried. And bears tried 63 to make this wedge top successful, but they failed. 64, very good bull bar close on high, so it was a very good buy. And then this was a bull spike, another bull spike in channel. There are a lot of gaps. You can see here there's a gap, and there is a body gap here, and here there's a gap, and here there's a gap. So that's very typical in the strong bull trend. I think another thing I want to say is this: when you look at this, four bull bars, they are in a trading range, yes, but they are still consecutive bull bars. When you see this, don't sell. There are 4+ consecutive bull bars. Even though they are small, that's telling us, both are telling everyone that they have control of the market. They are stronger than bears, so that's not a good way to sell, a good time to sell. I think what I did today is I actually sold below 40 when I come back from lunch, and I didn't pay enough attention to these for bull bars, and then at 41 I realized that okay, there are four consecutive bull bars here, and twice happened twice, and today more likely in a bull trend, so I get out really quick. It was kind of a dangerous trade. So it's not when you see this, definitely not I don't think it's a good idea to short. Other than that, today was kind of amazing because 99.95% of the time there is at least one bar closed below the EMA, and today is an exception. It falls into that 0.05% of the time where there is not a single bar closed below EMA. That's pretty rare, and the day didn't feel that strong. Actually, if you were trading this, you don't feel this day was that strong, but it is. That's the kind of that's the typical small pullback bull trend. It doesn't feel that it is that strong, but it keeps going up. And so yeah, I think that's for the day. And if I think today is a good bull bar close on high. I don't know tomorrow if tomorrow is going to be a I suspect tomorrow is probably maybe a bull day, maybe a bear day. I think the chance is really 50-50. We will see. I guess we will see tomorrow what the market will do, and if they create another good bull bar close on high, then we talk about this big bull bar being a merit move, and then bulls want to go a merit move target to somewhere here, right? But we have to see. For now, I think it's still good for both, especially today being a good bull bar close on high. Both is definitely going to want to try to break out above this tight trading range. And for bears, this is not very good for bears today. The good bull bar is not very good for bears. And if they make a good bear bar close on low tomorrow and they raise today's bull bar, that might change. But for now, I think overall it's good for both.